good morning. You're watching The Market right here in 18 Hour with me, Aisha Faridi, Avang Dabash, Hanisha Jain in the studios, and quite consolidation. That's how you would sum up yesterday's price action. While FIIs, they continue to sell India, but DIIs have been buyers. But it was a very muted session. Yes, you can, read into those jagged edges, but from the high to the low of the day, it was a very narrow band that we trotted along in. We'll talk about the global handover this morning. That continues to, stand tall. Though one must add that yesterday, most of Asia, the global handover, or for that matter, even how the European markets were trading while we were shutting shop for the day, they were all in the week and we managed to do pretty okay. Having said that, overnight, the S&P has managed to rise for a 7th consecutive day and all major averages are on pace for gains. And, the good thing is that the 10-year yield, that continues to pull back, and almost on a daily basis, ever since that retrieval started, you have been seeing India markets gain pace. In fact, not just India, pretty much across the globe as well. So that's pretty much been a respite. And more importantly, ladies, the fact that crude has cooled off the way it has.
And it has cooled quite substantially. Yesterday was a 4% drop that we saw overnight as far as crude prices are concerned. And now, of course, they're sitting at the lowest level since the month of July. So a 10% kind of pullback is what we have seen from the recent highs, just around that $82 per barrel mark. And it's, of course, below all the key moving averages as well. Even if you look at the reason for, the decline, of course, the China data that we saw yesterday, the trade data wasn't very supportive. The exports are down for 6 months on the trot. So that's putting a bit of a weakness as far as overall demand woes are concerned as well. As a result, of course, we'll see an impact back home as well. Do remember that every $10 barrel crash when it comes to crude prices has a positive impact on the current account deficit by around $14 billion, which means it can narrow the GDP by almost 0.4%. Retail inflation eases by almost 50 to 60 basis points, and then there is a ripple effect across the board. So crude coming off is definitely good news for the Indian markets, and that is what we are going to watch, and that remains the key talking point today. And I'm guessing, Avan, this will just fuel the rally that we have been seeing. At least we're holding on to that 19,400 mark.
Yes, absolutely. The fact that crude is at a 3-month low, you've also got a buoyant market handover that you said from Wall Street, a lot of those tech stocks riding hard and fast, and that perhaps could fuel sentiment on D Street too. So yesterday, how we wrapped up the trading day was absolutely flat. So around the 19,400 mark, that level was maintained. But the fact that there had been a 3 straight day run up, perhaps that little pause was inevitable for the markets. You did see buying toward the fag end of the trading session, and that I think to a certain extent helped trim some of the earlier losses. And mind you, the broader market seemed to be in a trajectory of their own, because 4 straight days on the trot that you're seeing gains coming in for the mid and the small caps, particularly commendable for the small cap index, which put on about 0.7% in yesterday's trade alone. And it's noteworthy to point out what went on with the Nifty Bank as well. You did see some short covering trends, as well as the fact that it is continuing its upward journey. So those are some critical levels as well to map out on the Nifty Bank. The support at around 43,000 with resistance at close to 44,000 levels. And all of this happening at a time when you do have the liquidity situation, which is not looking a flush. You've got the FIIs, which continue to remain net sellers for 10 straight days. And the retail holding as well in the NSE, that's jumped about 5 times in the last 3 years. So that continues, I think, to support the market. So you did see buying coming in to, as we said, the banks, so the likes of an IndusInd Bank or an Axis Bank, SBI Life, Kotak Bank for that matter, was on the winning side. You had heavyweights within the pharma space, oil and gas, or oil marketing companies that held out. So Sun Pharma, BPCL, Hindalco, Ultratech Cement, those were some of the winners. So clearly, Aisha, seeing traction coming in when it comes to the retail participation, and that perhaps led to that last hour spurt.
Yeah, that really seems to be the case, considering both the resistance as well as the support bands for the index are now scaling higher as we speak. In fact, most of our charters, and we'll have them shortly as well on the show, are now marking the resistance for the index at 19,500, 19,550 thereabouts, and the support band as well is now inching higher. So it's no more that sub 19K level that we were clocking just about 2 weeks back. We've moved on to that 19,000 18,200 being the first support for the index, and then 19,000 thereafter. And similar is the case with the Bank Nifty as well. As divergent the performance within the Nifty Bank may have been, but the support and resistance marks are definitely scaling higher. While FIIs continue to sell India, the only thing is that, increasingly you're seeing the quantum of selling abate a little bit, and that was pretty much the case in yesterday's trading session as well. If you were to just mark up the FI quantum, that has definitely reduced than what we had, say, about even 10 days back. So that really is one good sign. Having said that, earnings still continuing thick and fast. Having said that, when you just look at the Nifty scorecard right now, largely it's been an inline count. That's what the Nifty scorecard seems to be indicating, while 20 Nifty companies have managed to deliver earnings which have been in line so far. The below count is 11 and the above count is 10 so far. Of course, it would be pertinent to watch what the rub-off from Novelis's numbers is going to be on Hindalco. That's going to be one key talking point. The fact that it's a strong show from Novelis for the second quarter, both volumes as well as revenues have risen on a sequential basis. In fact, they've actually surpassed that $500 per ton EBITDA guidance as well that they actually put out. So that's something that will see some amount of rub-off on Hindalco. But before anything else, and before we mark what the chartists are telling us and what the technical setup is looking like this morning, let me take it across to Vinny and find out what the global setup and commentary has been overnight. Vinny?
Good morning, and let's talk about the first commentary that is coming from Mark Mobius. Obviously, he's talking about India, and he believes that India, in terms of the investing landscape, is now mirroring the US. He believes that we will see a balance in India between the active as well as the passive strategies, and that will furthermore flourish in the country, as well as he foresees mutual funds and ETF actually gaining a substantial traction as well. He believes that half of the money will start going into individual stocks and the other half into funds, and likely to see more individuals starting to invest in the Indian markets, Indian stock markets, and that is going to be something that he envisions going forward in India. Let's move on to the next commentary that we have coming in from Federal Reserve's Governor Michelle Bowman, who's saying that she believes and she thinks that the central bank will need to raise interest rates higher to continue to control the inflation. And furthermore, what is adding to that is the surge in the treasury yields in September has led to a further tighter financial condition. So let's keep an eye out on that. Moving on, we have commentary that is coming from ECB's Nigel, who's highlighting in terms of they remain quite vigilant due to the uncertain outlook, and they believe that the factors could keep inflation more than elevated than what the ECB has actually predicted. So keeping an eye out on that one as well. Lastly, we have commentary that is coming from Peter Schiff, and he's talking about WeWork's filing of bankruptcy. He said about 2 years ago, when the company did go public through the SPAC, now WeWork filed for bankruptcy, and they said the problem is not only that he's highlighting. The business model was obviously long before the IPO, and investors just need to take care of what they are looking at. Now it's a huge problem in terms of the commercial real estate space that he's highlighting, and the banks that owe the debt as well. So there is a lot of issues that come out, and he's highlighting in terms of the real estate problems that comes out with WeWork's bankruptcy as well.
Lots of moving parts, and that's the global commentary coming in. But time to bring on board our chartists and find out what their view is on the markets. We've got Kunal Bothra right here with us in our studios, Vaishali Parekh as well joining in from Prabhudas Leeladhar. Morning, and good to have you both on board. Kunal, let's begin with what took place for our own markets yesterday. The fact that you did see perhaps a 3-day gaining streak coming to a bit of a pause, but given the furious rally we've witnessed on Wall Street, what are you penciling in from the 19,400 mark today?
Good morning, Avan. So the good part about the global markets is that it's not just a rally which is happening across the Dow, but the market breadth in the US markets is extremely strong. And I think that's what, we've been looking at the indices, in the subsector indices for the global markets and the US markets. And I think that's been a bit more vibrant. And I think this time around, we could probably expect that this trend would sustain for global indices. Dow Jones has come back above the 200 moving average. Again, that's a strong sign of confidence for that particular index as well as for most of the other global markets. And I think we are also looking at more of a risk-on phase across various asset classes, whether it's Bitcoin, gold, etc., where many of these asset classes are giving some kind of a breakout. Now, coming to our markets, we've seen a good 650 points rally for the Nifty from 18,800 odd levels to 19,400 plus where we closed yesterday. I think now we could be looking at 19,200 as a base or a support for the index. And my expectation is that in this next leg of uptrend, we could have a lot of different sector participations which could lead the index to inch up higher from current levels. So my near-term targets for the index is closer to 19,800 and stop loss or the support for this range is 19,200.
So that's a take as far as the Nifty is concerned. But Vaishali, what about Bank Nifty? Over the last 4 days, we have seen that gains come in almost a 1,000-point rally that we have witnessed so far on Bank Nifty. And towards the end of the trading session yesterday, it was the banks that actually pulled the markets higher. Do you expect that momentum to continue today?
Very good morning. Yes, actually, yesterday we saw the latter part of the day, the frontline banking stocks really took the lead. But on a intraday, for a hourly chart, if you may say, on spot basis, Bank Nifty is facing a bit of resistance at 43,750. So once we see a decisive move past that, we would be looking at a continuation of the uptrend towards 44,000, 44,200. So yes, for now, view is very positive, but let's see what happens above 43,750.
Okay, let's talk about individual stocks too then. Kunal, what's in your list?
So the first one which I'm suggesting as a buy is Radico. That's a stock which has confirmed a breakout. Now it's not that all the liquor stocks are doing pretty well, but I think Radico is the one which is confirming a swing breakout on the charts more on the short-term time frame. So buy with a target of 1400, stop us at 1330. And second would be a buy on ICICI Bank. My sense is that in this last 4-5 days of uptrend for ICICI Bank, this could now be a leader stock from the private sector banking names. The stock is on the verge of breaking out of its 50-day moving average and could be in line of a breakout of the previous highs of 1000 plus levels as well. So near term targets of 988, but would be very bullish on the stock over the near term. Stop loss 934.
All right, Vaishali, let's find out what's on your radar, top stocks that you're tracking.
So yesterday we saw a very good momentum coming in the OMCs. So we continue to stay very bullish. And yesterday, of course, HPCL has moved past the tough resistance of 272. So our view remains very positive on the OMCs. Like what we saw in IOC has taken the lead this time. But then it's time for HPCL to follow the trend. So my stop loss would be 265 right now for a target of 300 and 310. So this is one of the stocks. The other stocks that I'm looking at is Cochin Shipyard. Technically very well placed. And we saw some momentum setting in yesterday. And I would say keeping a support of 1,000 levels. So my stop loss would be 990. I would look for a target of 1,300. This would be a positional trade.
Thanks very much.
And I'm also looking at one more stock, that is Poonawalla. We've seen a good trend setting in, and after that, there was a consolidation. Poonawalla, we saw the recent high that was made was at around 450 levels. From there on, it has taken a corrective move and now consolidating at around 350 levels. So it's showing signs of reversal, also taking support of 200-day moving average. So very well placed. Risk-reward ratio is very favorable. 340 should be the stop loss. Look for a positional target of 400.
Okay, there you have it. Those are your top trading recommendations from our charters. Let's move right on. Samit's with us in our studio to discuss the stocks to take cognizance of. And let's begin with Interglobe Aviation. Not good news. Some aircraft, further aircraft are going to be grounded. And what are the implications of this, Samit?
Well, if you see in the second quarter call, the company had clearly said that there would be more groundings coming in the fourth quarter. But right now we have a number and they're saying that the grounding could be around 30. So additional 30 aircraft would be grounded. So currently around 40 aircrafts are grounded and more 30 could be grounded in the fourth quarter of FY24. Now this is additional 10% of Indigo's fleet. And what analysts are saying that is because of this, the ownership cost of aircraft could arise higher for Indigo and which could also dent the profitability going forward. Now analysts are expecting around 10% rise in the fleet ownership cost, which could impact the net profit by around 3 to 4% going forward. And the more important part here to factor in is the fact that its competitors' fleet won't be impacted because Air India and Vistara both use A320neos, but they have CFM engines and not the GTF engines of Pratt & Whitney, in which there have been issues. So there is a possibility of market share loss also going forward for Indigo in the fourth quarter of FY24, and that's the more concerning part as per analysts. Now, apart from this, there's one positive thing that is coming in. Firstly, the fact that the company has continued to maintain their capacity guidance, but how they are going to do this is something that analysts are still wondering, because if you see the capacity is still there's a constraint on supply of aircraft, and in that also, if they are saying that they are going to maintain the capacity guidance, which means that they will have to lease more aircraft at a higher cost going forward. And and another positive fact coming in here is that the crude prices have seen a sharp fall, and which could give them some breathing room on the cost side. So that is one positive coming in for Indigo currently. But on the negative side, it's the fact that more aircraft would be grounded, and their fleet cost or fleet ownership cost is expected to rise going forward.
Okay, so that was about Indigo, and of course we'll watch out for those groundings and the impact it has on the stock price, because as a lot of analysts have been saying, the best is perhaps behind for Indigo. But what about crude? A big crash overnight. What are the implications from it?
Well, it's definitely positive for oil marketing companies, and hence we had seen such kind of an upsurge in the share prices of all the three oil marketing companies, that is HPCL, BPCL and Indian Oil Corporation, in trade yesterday. Now, this is because this fall in crude oil prices increases the gross marketing margins for all the oil marketing companies. When crude was at $97 per barrel, if you see the gross marketing margin on petrol and diesel was the average gross marketing margin on petrol and diesel was largely on the negative side. On petrol, they were earning a marginal profit of just 1.7 rupees, while on diesel they were earning a loss of close to 6.1 rupees per litre. But now this has turned positive. On petrol, it's around 4.5 to 5 on spot crude prices, and on diesel it has turned positive to around 1 rupee per litre. Now, what Street is however not factoring currently is the fact that this sharp drop in crude oil prices could lead to higher inventory losses for oil marketing companies, because definitely they would have bought crude at higher prices of $97 per barrel, and now they have to sell it at around 82, which means that there could be some inventory losses for the oil marketing companies, and this would be much more negative for companies which are standalone refiners like MRPL and Chennai Petro, because they do not have any earnings coming in from the marketing side, and on the refining side there will be losses because they will have to sell crude now at a lower prices, even though they had bought it at around $97 to $90 per barrel. So for oil marketing companies, this is the fact. Other than that, there is oil exporters, on which the impact would be largely neutral, given the fact that there are windfall taxes and their net realization was capped at around $77-78. And then there are a host of other sectors like paints, aviation, as we just spoke about, lubricant manufacturers, tires, cement companies, and a host of specialty companies that would stand to benefit, because there are nearly 40 to 50% of the total cost is either crude or crude related.
Right. In fact, we're going to be looking out for some of those stocks and see what the implication of the crash in crude is. In fact, let's pick up on that point further. The fact that oil prices have fallen to over a 3-month low. Peter Maguire joins in on the show right now. Peter, hi, good morning. Good to have you today on ET Now. Peter, this knee-jerk reaction, I guess, is coming on the signs of higher supply. But you think crude prices will continue to be, de-escalated?
Well, good afternoon. Well, good morning. Greetings from Sydney. And no, I don't necessarily think they'll be de-escalated, but I feel as though that there's a lot of, I think, those moving parts that have all digested through the market. We understand those numbers as far as China yesterday that really, I think, demonstrated, from an export-driven economy, that they need strong global growth, and that just hasn't materialised. And I think that washed over a little bit to the crude market. Also, you saw that US dollar bounce a little bit to the upside. And I think that just overall, the hot steam coming out of it, as far as their situation now 4.5 weeks on in the Gaza/Israel situation. And we've just got to see whether that war premium really, takes a couple more dollars out of it.
Sure, but Peter, apart from crude, want to discuss cricket with you as well. What are innings yesterday from Maxwell? I mean, unbelievable is an understatement.
Well, we're in the final. It's going to be a lovely final, and we're just not sure who we're going to play. So that's the issue at the moment. I hope it's India, because it'll be a wonderful game. But Australia will certainly be in that final. And with the likes of Maxwell's magnificent innings, I'm pretty sure that will put the fear into a lot of other teams. I'm being a little facetious, but I think go the Aussies.
That was Scott this time around. So you must be really gleaming ear to ear and smiling ear to ear.
And given the fact that guy had so many cramps, he was literally just standing in his crease and just hitting it out of the park. So, I mean, crazy
Is that
innings.
adrenaline, I guess?
Absolutely. But I'm just surprised Peter's already dreaming about finals, not even semi-final, who's going
so
it to
are
begin.
I mean, you're almost
at least we have been
assuming
strong
that
enough throughout. We have an unbeaten streak. Can't say the same about Australia.
Yeah.
But I don't want it to be an upset in the finals, so I'm happy not to meet Australia in the finals. Let's see.
Yeah, absolutely, especially with this kind of a performance. But Peter, that aside, yes, lots more to discuss when it comes to crude oil prices as well. And give us a sense as to how, what your expectation is now in terms of what the EIA as well could do, because they're talking about the total petroleum consumption as well falling quite significantly and reversing from that earlier forecast as well.
Well, yes, I mean, I look at the forecast and I'm conscious of the big picture, and there's no doubt been, the implications of rate rises and the impact that has to the spending power of wallets and purses globally, inflation, and, high energy prices. So, yes, there could be a little bit of a tail off there, but I'm also looking at, what the impact's going to be as far as Saudis and Russia and whether they continue their cuts well into 24. That's the other side of the handle. So, I think it's going to be volatile. I don't necessarily think that these big swings are going to stop. And we've seen two big blowouts or big moves to the upside and then blow out all of that hot air come out. Maybe we're going to be the third time lucky. Soon you might see another one. We've just got to see how it goes as far as geopolitical shocks or anything else that can impact the market.
Okay, Peter, on that note, we'll let you go. Appreciate you making time and speaking with us. So that's about crude. But let me take a technical check as well. Kunal, you follow this one. Anything on the charts interesting about crude?
Yeah, I think the asset class is confirming a major breakdown as such. 96, I think approximately was the high for Brent crude sometime back, I think almost a month out back. And from there, we've seen formations of, first double top and then a sharp fall which had happened for crude oil prices. So I think around 88, 89 was the first level of correction for crude oil prices. Then it bounced back again and then went into a sharp correction. So this could probably be a very strong signal that now we are heading towards the lower end of the range for Brent crude. I think 74 odd was the previous swing low for Brent crude. So we would probably be expecting a retest as well as a breakdown of this previous major swing low for Brent.
All right, there you have it. That's the view coming in on crude oil prices. Tell you what, we'll slip into a very quick break with news that the Nifty indicative open is indicating around 19,500 plus levels. Come right back as we chat stocks, levels and top ideas.
Well, we have Sanjeev Bhasin joining us to talk to us about some top bets as well as what should we make of the moves that we are seeing on stocks. And Mr. Bhasin, I want to begin by discussing Trent as well as Arvind Fashion. Solid numbers yesterday. Valuation by any means is not reasonable for these stocks, but nonetheless, they continue to perform quite well when it comes to earnings. What should one do right now?
Yeah, good morning, Anisha. The stocks have anyway depicted that what the earnings are now playing out. And people in the know of it realize that what retail and the fashion whole brigade, how that's playing out. Arvind carved out its 2-3 businesses much before. One was the demerger of the real estate arm, the cotton business, and the fashion retail. All those three have played out brilliantly for shareholders. We still think that consumer spending is strong. These stocks are not cheap, but they are pedigree stocks in the sense that they've performed brilliantly. And I think that, they are playing to the masses in the sense of fashion retail and the retail outlets which Trent has. It has picked up brilliantly. I think Chroma, their subsidiary, is doing even better. So I think some of parts, this is where you will see why Reliance Retail is getting a market cap of 10 lakh crore. It is telling you that the spending pattern and the demographic premium of the middle class is playing out superbly in India.
Okay, so that was about Trent, but any take on the earnings of Apollo Tyres? Because the entire tyre space as well has been reporting very solid, said good margin expansion, good top line growth.
Correct. And Anisha, if you saw, it's been about 6 months since Apollo was, not 6, about 8 months. It was 180, 190, and in the throes of, not performing when autos were seeing superb sales. The added advantage has been the ban or not uncompetitiveness of the Chinese imports, which has seen tire stocks, particularly because of the fall in SPT rubber prices, do exceptionally well. Now, Apollo Tire is obviously more than doubled from its price of 180, 190, and advocating a fresh buy would be difficult, but we still think Apollo, MRF, and CEAT are must-haves in your portfolio. Auto sales and the whole gamut of owning of aspirations is doing extremely well. Their cost of input is been on a lower wicket, and I think going ahead also there will be better numbers coming. But this was an exceptional quarter.
What's the take on the charts of trend? Because I think about a month or so back, you were saying that this is going to be an underperformer, right?
Yeah, the stock, was a big underperformer, and I think I would probably expect that, on a longer term basis, it's still a stock which could continue to show signs of drag. So what's actually happened is the stock has gone into extreme overbought nature in terms of indicators on the long-term charts, and I'm talking of it on the quarterly as well as on the yearly basis, where the stock and the RSI has reached extremely overbought levels. So I think initiating a fresh buy at current levels may not be a good decision for the stock price, because my sense is that such kind of strong overbought nature zones on the quarterly yearly charts generally results into major underperformance for the stock for many quarters as well as years to come by. So would not be looking to participate into the uptrend for trend, and there are a lot many better options to try and trade in the broader market as such as well.
Right, okay. Let's just look at what's happening within the broader end of the market. By the way, trend yesterday shot up a good 9%, no less. You also had HAL do very, very well. There was IOC, HPCL, both those stocks held out very smartly indeed. And then, of course, there was Alchem Laboratories as well, which shot up about 5.6% post its numbers. Sanjeev, we've seen a big cool-off come in crude prices, and hopefully it's going to stay under pressure. What is your sense on whether or not one should look at crude sensitives, any of the OMCs, aviation companies, paint sector?
Yeah, good morning, Aisha. Well, that's the undoing of the market. Who thought that crude will fall 15% in a month? And Indian markets are still at 19,400. So firstly, I would say 19,700 on this Diwali at least, and maybe another 1,000 points on the bank Nifty, given that banks have been the laggard, and I think they will be the catch-up. So I would play rate sensitive through the banks on the count that inflation and yields are indicating that the RBI is going to do nothing on rates, and so is the Fed. Like you pointed out, you could add an Asian Paint or an Indigo because of the sheer weight of the metals, but I would go with specialty chemicals. I have been bullish on a contrarian play on SRF and Deepak Nitrite. You can add a Tata Chemical, one of the best plays on soda ash and sodium bicarbonate. And crude fall will definitely add to their margins. The stocks are very, very reasonably priced. So Tata Chemical, SRF, that basket looks very good. And like you said, be with the pedigree Asian Paint and a Berger Paint. Indigo on declines because of the news today would be an added play, because cost of fuel falling means their margins and the type of traffic they are seeing, or the seat occupancy is never seen ever in before. So I think all that will add up to a good basket if you do. But for me, the outperformance would be Bank Nifty.
Okay, fair enough. That's a view coming in on a whole host of stocks. Meantime, let's get in your take as well on what the outlook is when it comes to the entire cement space. Shree Cement, for instance, posted a very healthy set of numbers. How have you read into the overall trends when it comes to volume growth, the demand-supply mismatch within the cement space? Are you sticking to the large caps, or does it extend across to mid caps too, Sanjeev?
Yeah, good morning. So Avan, cement has been on a very, very strong wicket and led by Ultratech mainly because of the large cap nature. It's a key Nifty component. Shree Cement arguably is the lowest cost producer of cement not in India, in the world, and their margins have expanded very, very smartly. This is the best time for cement companies because quietly prices are raised, and we know that construction infra activity is at the highest. So I would still stick with Ultratech, and I would add an Ambuja over here. Ambuja ACC are giving a very good entry opportunity. Their pricing power, and particularly Ambuja because of the port's connectivity, is a very, very smart play over there. So I would put my money on Ultratech and both these play. Shree Cement is a market performer and it will continue to be on the upside. But since it's not an index component, we want to believe in these three names.
Vaishali, come in on the charts of Hindalco because that will be in focus on account of Novelis' strong show. Do you see some strength in the chart of that one? And also within the pharma pack, which is your top favorite? Vaishali?
Yes, so Hindalco actually we have been bullish because overall, let's start with the metal pack. It has taken a support on a long-term trend line, and we were expecting a bounce coming in from this sector, and we saw this coming in. Hindalco was leading it, so of course it is a positive view. I would be looking at a near-term trading target of 495. A move past that, we would be looking at 505 to 510. So Hindalco for near-term basis, it's a good hold for the higher targets.
And what about the pharma sector, Vaishali? Any top bets?
So yesterday we saw that yes, pharma was the pack index on the whole was showing a good momentum, and I think it's ready for a new round of momentum on the whole. So I would be seeing Sun Pharma, which has given a breakout. I'm bullish on that. Cipla is an attractive level to start buying the stock because Cipla still has a lot of upside potential from here on. Current market price is 1,216. So I would say that 1150 would be the support, and I would look at a target of 1350 to 1400 levels. Even Oro Pharma, as to say, Oro Pharma overall the long-term trend is also intact. And yesterday also we saw that there was some momentum, good price. Volume also, so I would look at a target of 940 to start with, and then to take it ahead 1040. So overall, pharma sector looks very positive to me.
Just some other stocks as well that we'll be tracking. Of course, a whole host of numbers to digest. There's been something like Cummins India as well, which came out with its performance. It's been an okay quarterly numbers. The revenue is absolutely flat at about 1921 crore rupees. The EBITDA actually down nearly 50% on a year-on-year basis. And then there was also a Prestige Estates, which came out with its numbers and a pretty fantastic performance with the profits skyrocketing to about 850 crores versus last year's 140 crore rupees, with the revenues as well scaling up. And Sanjeev, this entire momentum within the real estate space has been evident in the last couple of months or so. Where is it that you're seeking opportunity?
Well, as a disclosure, both those large cap plays, DLF and Godrej, are our portfolio picks, and they've been there for the last 2 years. We think that they are just on the tip of the iceberg, as sales are seeing huge demand and prices are skyrocketing, particularly in NCR area and anywhere you go where they are. Plus, their deliverance of houses, the demand for pedigree players is playing out brilliantly. Prestige numbers and Brigade in Bangalore are doing extremely well. And Shobha is the pick over there as a dark horse. But we continue to think DLF and Godrej are going to trend higher over a period of time.
DLF, Godrej Properties, these are the top recommendations within the real estate pack. But shifting focus back to what was happening to Trent, of course, it was a very strong show that the company reported yesterday, but what are the brokerages making of it? And have they raised their target price or their calls on the company? Let's go across to Amakshi to find out just that. Hi, Amakshi.
Well, yes, a strong set of numbers is what Trent has reported this time around. In fact, the numbers that the company reported surpassed the street's expectations quite significantly, and that is the reason why we saw a very sharp uptick come in the stock yesterday. Now, largely, let's also look at what brokerages are saying about Trent. Jefferies has highlighted that it was a miss, but not for the company, because the company reported a good set of numbers. Zudio's revenues in the second quarter more than doubled, while Westside posted a growth of almost 20% on a year-on-year basis. And despite the end of season sale, the gross margins have surprised positively for Trent. But for Jefferies, where is the miss? Well, the company says that is a miss on their part because they underestimated the earnings potential for Trent, and therefore they stayed on the sidelines. But nevertheless, they believe that the valuations for this counter are still stiff, and that is the reason why they've maintained a hold rating. But nevertheless, we're seeing a very sharp uptick as far as their target price is concerned. They've raised it from 1,640 rupees per share to 2,050 rupees per share. Nuvama also seems to concur with this view, because they believe that the incredible growth that the company has been posting over the last few quarters seems to be continuing ahead as well. The star format especially is showing a very significant improvement in their opinion, and in fact they believe that the outperformance of Trent is a combination of several factors, which includes store productivity, quarter-on-quarter gross margin improvement, and that has come in despite quarter 2 being an end-of-season sale quarter. So largely, given all of these factors, Nuvama has also maintained its buy rating, and in fact, Nuvama has hiked the target price again significantly from 2,119 rupees per share to 2,855 rupees. So largely, brokerages are also quite positively surprised on the numbers that were posted by Trent, and most of them have actually gone ahead and raised their target price in this counter.
All right, thanks very much for giving us those details. Let's get a move on then. And Apollo Tyres as well in the spotlight. A strong set of numbers in Q2. Profits actually saw a smart jump on a year-on-year basis on the back of better profitability in India as well as EU. Let's get in Sharad then. He joins in with all the number crunching. Sharad?
Well, it's a very strong set of numbers coming in for Apollo Tyres, and of course the margin front, that is where the expansion has taken place. On a year-on-year basis, there has been a 651 basis points of jump. However, if you look at the revenue, that has seen a smaller jump of roughly 5%. But overall, sequentially also the numbers have been strong when it comes to the EBITDA beat. Now, of course, two reasons are there. First is, of course, the fall in the crude derivative, the lag which was coming in for the last 2 to 3 odd months, and that is why all the tyre companies have actually performed very well, and also the cost saving measures which are being undertaken by the company. Now the jump in the consolidated PAT levels, this is coming in the profitability for both the markets of India as well as the Europe. Also importantly, the net debt levels, that has been largely flattish, coming in at 3,800 odd crore rupees, but the cash flow generation, that has actually gone up, and that is why it has aided the financials as well. Now, looking at the overall what the tyre industry has done in the Q2 industry, in the listed space, if we look at it, majority of the players, Apollo Tyres, MRF, JK Tyres and C8, they have got a good margin expansion on a sequential basis. And in our analysis, we have taken the standalone business, and we can see they are ranging between 90 to 330 basis points. And if you look at the valuations also, they have corrected since the highs which we saw in this year itself, and the valuations are ranging between 9 to 14 times of the 12-month forward P ratio.
Okay, thanks Sharad for joining us with that. Mr. Bhasin, what about railways and power as a pack? Do you think the best of the rally is behind and time to have a bit of a sector churn?
Anisha, yesterday REC PFC again hit new highs, so did NTPC. So no letting up. The left out feeling is humongous. These stocks can go up 30% more. And it seems like they've always reached a crescendo, but all declines are bought into. Yesterday, the small cap index hit all-time highs. So I think the bearishness has played out perfectly for the ETF outflows, and Reliance and HDFC now seem to be on the flattening of the curve on the upside. Reliance is raising 20,000 crore as NCDs. That adds to its kitty. And I think power, railways and PSUs are a must-have. Buy some now, buy some on decline, but don't miss the upside. New highs are meant to be broken on the upside, so don't challenge them. Of course, valuations, and there will be some sort of vertigo when it comes. But right now, who's ruling the roost is the people who own those stocks.
Fair enough. Meantime, also keep an eye out then in today's trading session on the likes of Rain Industries. It's been a pretty disappointing set of earnings with a 90 crore loss this time around and margins having shrunk in the quarter gone by. There's also something like a Mishra Dattu that came out with its earnings with the profits slumped nearly 58% on a year-on-year basis, with revenues growing in the quarter gone by. And Power Grid as well, it was a bit flat when it came to the quarterly performance. Sanjeev, just wondering what the outlook is then when it comes to some of these PSU stocks, in particular the railway names. After having seen a run up, what's the outlook on how you're looking to approach these stocks at the current juncture? IRCTC, for instance, is another result candidate.
Well, IRCTC numbers will be very, very strong. And IRCTC is not a quarterly play. You have to play this on the sheer business side. 85% of its EBITDA is on the ticketing side, with now Vande Bharat adding to it. 36% is on the water side. Near is a monopoly, NWR, which has got 82% market share, and 16% comes from the catering side. And you can imagine the type of railways to and fro with the new lanes being laid, the frequency of travel. All that means IRCTC is a must-have in your portfolio. The business model is superb, and I think over a period of time, maybe by next Diwali, a 50% upside is very much on the card. That is one of our top contrarian picks in the PSUs, along with Concor and IEX.
Okay, there you have it. That's the view coming in on the entire railway space. Good to have you as always, Sanjeev. Thanks for joining in. Time to welcome on board Chakri Lopriya as well, who's joining in on the show. Chakri, thanks so much for taking time out. Let's get in your take then first up on the entire CapEx theme, going by the fact that there is a lot of optimism on manufacturing picking up, earnings, order booking activity as well looking strong. What's your outlook on the CapEx theme and how would you play it from a stock-specific standpoint?
Good morning and thank you. And if you travel across the country today, you can see that India is like a construction site. So everywhere you see men at work boards. And if you look at the capex of the government, both the central government and the state governments, for the central government, it's a very big figure, something like 10 lakh crores. For the states, different states, the most industrialized states, which are the South and Maharashtra, their capex is up very strongly. So this naturally lends to all the construction names and the manufacturing names. So which is right from the big ones like the L&T, which has already met its 2/3 of its guidance, and it looks like it will beat for the year. So which means the company's valuation is still very attractive, and several manufacturing names across board, including the EPC companies. If you look at road construction, has actually been weak. So if that picks up, then the EPC names will also start doing well.
But just want to kind of step back and talk to you about the market as a whole. Which space do you think is looking the strongest right now?
So in fact, I did a relative strength analysis on the index from the 18,800 lows, and apparently it's the the real estate sector which has actually gained exceedingly well. So there are two metrics in which we tend to look at the relative outperformance. One, of course, is in terms of price gains, and the other is in terms of how the RSIs have jumped up for many of the sector indices. And apparently the biggest jump in the RSIs have happened into two sectors, that's real estate as well as infra. These are the two spaces where you've seen a good jump in terms of momentum. Real estate index in price gains have, I think, risen up some 11% or 12% from that relative low of 18,800 on the Nifty. The second best performer is actually the media and the PSU banking in a lot. These are the two indices which have also done reasonably well. We've seen a good jump happening into the likes of Z, Sun TV, etc. from the previous swing lows. So I think these are few pockets which one could be concentrating on. The underperformer apparently, in terms of the relative scale, is actually the auto index, where the auto index has just gained up 1 to 1.5% relatively. And I think that's one of the bigger concerns, because since the last 1.5 odd year, you had auto stocks which were doing exceptionally well. It was earlier M&M, then followed by Tata Motors, and Maruti gave a breakout. But I think this time around, it's a bit more scattered, and that's why I believe that this sector, as of now, remains to be an underperforming one.
Chakri, what's your take on autos? The four-wheeler, two-wheeler category, any name that comes to mind?
All the auto names have actually done very, very well, as Kunal just explained. Against that backdrop, if you look at the companies which have a sound EV backbone and EV plans like Tata, TVS Motors, M&M to an extent, but it's more a sum of parts story. So I think TVS Motors, Tata Motors, both look good. And I think still there is enough fundamental run-up left in the stocks.
All right, that's the view coming in on some of those auto stocks. Meantime, let's just check in on the flip side. In yesterday's trading session, which stocks did come under a bit of pressure. And apart from a Hero MotoCorp, there was a Reliance Industries, ITC. Those two heavyweights as well fell the heat. Kunal, come in on these two majors, ITC, RIL at about 23.
So RIL will still be a bit bullish on, because even though the stock has underperformed compared to the 2,600 highs in the month of June, July for Reliance Industries, but I think the recent recovery in the last 10 odd days, a 100-point jump from 22 to 40 mark for Reliance Industries, was on the back of some higher volumes and some evidence of short covering which had happened for the stock. So my expectation is that Reliance Industries can stand to gain from current levels, would be looking out for moderate gains on the upside, say 2400, 2450 odd marks. So another 60 to 80 points is what I would expect for the stock, at least to the very near term. ITC, on the other hand, the stock has been a big drag. Now, I remember, I think at 490 odd levels, there was a lot of news flow which was confirmed for the stock price. But since post then, we've actually seen the stock dropping down significantly, underperforming. First, it managed to break below the 450 mark, which was a huge support for the stock price, and now it's back to that 425, 430 levels. So I believe that now the new range for ITC on the downside is actually 400 to 450. We could probably expect that 450 on the upside could act as a major resistance. And on the downside, I wouldn't be surprised even if the stock retests that 400, 410 odd mark.
Okay, that's the view coming in on the two heavyweights. Meanwhile, in yesterday's trading day, as we said, the broader markets were really on a smart trajectory, and a lot of names that gained traction include the like of a trend that we flagged off. BSE was up and about, something like a blitz. GVS Pharma, by the way, double-digit gains on that stock with a 13% notch up. Dhanuka Agri as well stood out in trade. Chakri, just wonder what your outlook is when it comes to the entire sugar space. Of course, you see spurts of action as and when there is a little bit of news supporting these counters. But what's the outlook by and large on sugar?
Sugar as a sector, we don't really invest that much. And so I'm sorry, I wouldn't be able to provide you any inputs on that.
Enough. What about when it comes to auto ancillary, tire stocks, battery stocks, etc.?
You know, the auto ancillary stocks, many of them have actually underperformed for quite some time. So companies like Minda, I think, or Motherson Wiring, these are looking extremely strong because, now they had suffered to an extent because of some amount of export volume weakness and also in realigning their business portfolios. So I think now that is largely underway. The valuations have corrected. The earnings, so you have seen a margin expansion. So I think Motherson, Sumi Wiring, as well as Minda look very good.
Okay, let's take a pause and let's now head over straight to news and updates coming in from the Milan Motor Show. In fact, Royal Enfield has showcased, remember, its first electric bike at the motor show, and my colleague Sumit Chaturvedi is here with all the exclusive details after he took a sneak peek at what this bike is going to look like. Okay, we will just get back to Sumit and get in more details straight from Milan. But, Chakri, just wanted to get your sense in on the two-wheeler space, considering how competitive it is getting, post the Bajaj stable launch, post what we heard from Hero, there was that big threat for Royal Enfield, and thereby you did see some price correction as well come by on Eicher Motors. Having said that, it continues to be the dominant player within the two-wheeler market with the maximum market share. But do you think Bajaj and Hero, or either of them, could have the might to give, RE a tough competition?
Both Bajaj and Hero today have, world-class products in terms of both Harley and Triumph, which bikes are now available at Indian prices and therefore present a very serious competition to Eicher Motors. So from that perspective, yes, it has had a dominant market share and therefore it's had those premium multiples. But now the competition coming in, I think that margins will start trending down and so will the multiples. So I think that's something we need to watch out for.
Okay, and Sumit is back with us. So let's take it across to him straight from Milan.
We're at EICMA Milan 2023 and here you are seeing for the first time Royal Enfield's electric bike. It's a concept bike though, but for the first time the Royal Enfield has showcased what its bike going to be, what this bike is going to be like. It's going to be a dirt bike. It looks like it's a proper off-roader. Royal Enfield is going to have electric motor fitted into it. It has already said it's not going to bring any scooters, so bike will be this. It's going to be a proper dirt racing bike. As you can see here, they've put it in a format where it shows that it is made for proper off-roading. It's for the first time company is showing its electric bike here. Remember the company which used to make diesel bikes earlier, but now it controls India's premium bike market and now it's coming with an electric product. This is the one which Royal Enfield has showcased at EICMA Milan 2023. Europe is a big market for Royal Enfield. It is a market where they are clearly making a big move. They have headquarters, they have more centers in UK. In Europe, they really plan to sell their bikes in a big way. Their bikes are quite popular also, and that is why these kind of bikes are showcased here in Milan. For the first time, this is the bike which is being shown here, electric future. In India, clearly every two-wheeler maker or four-wheeler maker has big electric plans, but Royal Enfield was so far not very committal. Then it said it's going to come, and the first electric bike will come in 2025. In last year, it bought a 10% stake in Spanish company Slike, and thereafter they co-developed this bike for the first time. Then you are seeing this is the complete bike here. Not just this, and here in EICMA Milan, in Royal Enfield Pavilion, there's Himalayan, the new Himalayan, which is currently showcased here. It has come to India. It has come to India, and it's clearly, it is being tested in India, and for Europe, it's a big market as well. So a lot of buzz and excitement here at Royal Enfield Pavilion in EICMA Milan 2023.
Thanks very much. That is Royal Enfield making its EV debut. In fact, I would like to get in your thoughts then, Vaishali, as to what the outlook is when it comes to the charts of some of these names. Eicher Motors, how are you looking at some of the other two-wheeler stocks?
So I would say TVS Motors definitely looks quite positive from here on. I think from here, if the rally continues, I would be looking at a target of 1800 from here on. But Bajaj Auto and Hero Moto trend is intact, but I see a flat move right now. So let's wait and watch till we see a further new round of momentum setting. But the overall trend is positive.
That's the take coming in on what some of the two-wheelers are doing, and Vaishali is clearly betting on TVS Motors as opposed to any other. Hero MotoCorp, by the way, is also going to be in focus. They're also in agreement with partners in Europe to now start EV operations come 2024. That's what we're understanding. But I think the key stock to look out for today is going to be Hindalco. Given Novelis's Q2 volumes have risen on a sequential basis to about almost 933 KT. The EBITDA as well has seen a jump up of 1% on a year-on-year basis. So that's going to be another stock to look out for. Chakri, anything from metals, ferrous or non-ferrous that you're liking right now? It very well could be the contra call.
Indeed, Hindalco's numbers, Novelis numbers have been very good. The stock has underperformed and the valuation is pretty much on its side. So I think, from a positional investment, so maybe the multiples marginally expands and therefore gives you like a 10% run. But as a space, I think clearly it's something which we still, I think it's to avoid for, given the global turmoil. Metals are still at a cyclical stay away from.
In fact, let's put the spotlight then on Hindalco and discuss Novelis's reported numbers in detail. It has been strong for the quarter gone by, surpassing that $500 per ton EBITDA that had been stronger than what was earlier guided. We've got Ashesha here to break it down for us, as well as give us details of the con call takeaways. Ashesha?
Well, yes, Novelis, which is Hindalco's wholly owned subsidiary, has reported very strong set of numbers. Revenues and volumes are up 6% sequentially. As far as EBITDA per ton is concerned, remember at the end of last quarter, management had said that they will cross $500 per ton on EBITDA front by the fourth quarter, but they've achieved it much before what the management had guided for. So in the quarter gone by, adjusted EBITDA per ton stood at about $519 per ton, which on a sequential basis is a growth of about 8%. Management commentary is also quite positive. Beverage can destocking is now behind us. Automotive demand is also quite strong on account of pent-up demand, and demand across segments continues to remain very strong. US and Europe outperformed in the quarter gone by, because of which the company has reported good numbers in the second quarter. Apart from this, macroeconomic and geopolitical uncertainty, they say, challenges near-term demand visibility. So that's a bit of a negative, but all in all, numbers are very strong. They expect EBITDA per ton for the third quarter to come in the range of $450 to $500 per ton, and in the fourth quarter, they expect EBITDA per ton to touch that $525 per ton mark. So management commentary is quite positive and numbers are also very strong. Macquarie has come out with a note where they are maintaining their outperform stance on the stock with a target price of 562. They say margins surprised positively in the quarter gone by. Expansion plans of the company are on track. Volume surprise drove EBITDA this time around, and Hindalco continues to remain their preferred pick in the non-ferrous sector. So all in all, very strong set of numbers. Management commentary is also quite positive, and brokerages have also given a thumbs up.
Kunal, let's address that stock on the charts because today definitely you will have the rub-off for Novelis' strong performance and Hindalco. What is Hindalco indicating?
Yeah, in fact, many of the metal stocks are actually starting to show signs of good recovery. It's actually JSW Steel, which was one of the stronger performers, that's underperformed in this leg. Tata Steel is also, I think, at 118-19 mark. The last I remember, I think SAIL has also been an underperformer of sorts. Hindalco apparently has been one of the stocks which has done pretty well. It's recovered from those 440, 450 mark to 480 plus levels. So a decent 8%, 9% up move for Hindalco so far. My sense is that this leg, the stock could break past about the 500 levels. But the only concern which I spot for the metal sector is the lack of very coherent kind of move across various stocks from the space. So, as I said that earlier, JSW Steel was one of the stronger performers. That stock is underperforming as of now, and so is the case with the other large cap names like Tata Steel, etc. So we'll take it maybe in a very staggered basis. Initially, I think 500, 510 odd could be a near-term target for Hindalco. But if the other stocks they start to participate and fire full cylinders, then I believe that we could probably be looking at a much stronger upside for even this stock.
All right, that's the view coming in on a Hindalco. Meantime, just a couple of minutes to go and we'll have the pre-open rates as well kicking in. And Chakri, let's get in your thoughts then. How have you assessed the overall earnings season so far? Any particular stocks that you believe have put out a standout performance that you believe, reinstate your confidence in some of these names?
This earnings season, we've seen a margin expansion and a revival of revenue growth. Both very important. Oil is down about 8% from, again, the recent Israel-Gaza crisis. And therefore, the margins trajectory going forward looks positive, assuming, again, of course, there are no major change in raw material prices. All the PSU sectors, whether it's manufacturing banks, if you look at State Bank of India, extremely good results. The provision coverage ratios are very strong. If you look at REC, their numbers have been upgraded very strongly and still it trades under book in spite of all the run-up. I think the stock, is a good 40-50% higher a year out from now. Power Finance, same story. Today, BHEL reports, I think, they're seeing very good order book growth. So let's see how their earnings turn out to be. Bharat Electronics. Again, same story, margin expansion. So I think it's a combination of both the PSUs and because that's where the capex is happening, the PSU banks and the power financiers who are financing that growth. And that is where the thrust of our investments, I think that's where the thrust of the upside primarily for the market is.
A couple of other stocks which are going to be in focus today. Apollo Tyres, of course, came out with an excellent set of numbers. There's been a margin expansion of about almost 651 bips on a year-on-year basis. So that's going to be one stock to look out for. And OMCs, of course, after the Brent crash all the way to $82 to a barrel, that's going to be one sector to look out for. And in any case, yesterday too, you had buoyancy on both HP, BP, IOC, or all three of them actually. Shree Cement also came out with its numbers. The PAT has actually come in almost 2.4x on a year-on-year basis. So look out for what Shree Cement as well does in trade today. But Vinity Organics, that may be a disappointment and a bit of a spoiler considering you've seen a revenue downtick of about almost 21% coming in for Vinity Organics. So I don't think those earnings are going to go down very well with the street, and you may see some correction come by on that particular stock price. Having said that, Chakri, one has noticed of late that there's been a bit of a recharge, if you will, in the entire specialty chemicals and fertilizer space. Anything that you're liking right now?
In the specialty chemical space, if you see that US is in the export revenue, which was the big growth driver for all these companies, which saw a huge re-rating, that is kind of weak. The US market is weak. Europe is, of course, weaker. And actually, Asia, the Asian markets are still very strong and are strong for the chemical industry. So against these backdrops, the valuations have corrected quite a lot. And mind you, the revenue as well as the EPS have also been downgraded. There's been a margin contraction. And therefore, the immediate business catalyst for these companies is the valuation. So we need to wait for an uptick in the business momentum, which I still think is a good couple of quarters away, because I think companies are waiting around the world for a peak of US margins because that determines working capital costs. So I think still chemicals, valuations on the side, but still a couple of quarters away.
On the back of, FMP, which is one of the largest US players within the segment, actually cut their guidance, and you did see a big correction and wave of, selling play out on the Indian players as well. The pre-open rates then this morning, and I think that's a bit of an aberration in the Nifty at least. The Sensex rates look more believable, a mild uptick of about 0.3%. Let's check in on what Hindalco is up to after Novelis's margin surprise and the expansion pretty much on track. That stock will just come up for you on your screens. Shree Cement, which we just flagged off, a 2% bump up coming in for Hindalco. Shree Cement, wherein the PAT has jumped up almost 2.5 times on a year-on-year basis, 2% higher for Shree Cement as well. Apollo Tyres too, margin expansion of 651 basis points, and I think that's going to go down well with the street, about 1.5% higher for Apollo Tyres. And then OMCs, or for that matter, even paint companies, which are the typical crude sensitives, along with, of course, aviation, while there's lots more other news flow as well on Interglobe Aviation. But yeah, you can see the crude sensitives hold a little bit buoyant, absolutely flat for Interglobe. Vinity as well will just come up for you on your screens. They've seen a revenue decline of about almost 21%. That stock just about mildly lower as we speak. Kunal, sectorally, anything in particular that you're going to be looking at for?
Real estate, I think that's a sector which I believe looks very charged up and strong. In fact, in the last leg of uptrend, when the Nifty had hit 20,000 plus mark, real estate, and I think there were two sectors which are outperformed, real estate and the PSU banking lot. This time around, so far in the last 600 points of recovery, the real estate index has gained some 11% to 12% from the previous swing lows. Many of the stocks, the likes of Godrej Properties, Oberoi, DLF, etc., even the mid-cap names like Anantraj, Prestige, these stocks have confirmed a multi-month breakout for themselves. So this may not be a short-lived recovery or a rally for these real estate names. Yesterday, I think these stocks were down 0.5% to 1% broadly, but I think that's a dip to buy into. I strongly believe that many of the real estate names looks quite strong, and I would probably be of the opinion that at least a 5 to 10% further upside for many of the real estate names could be seen over the very near term.
And that when most of these stocks are already sitting at either their life highs or 52-week highs. Chakri, before we let you go, what's your preferred list when it comes to realty?
Realty, I think, DLF, Shobha, these two companies, I mean, even Prestige for that matter, they all look very strong. They've all done very well, but their order books, their inventory clearances have been exceedingly strong. Against this backdrop, I think you will see margin expansion. Therefore, yes, these three stocks.
Okay, thanks very much, Chakri, for taking time out and joining in on the show. All right, what are the pre-open rates indicating this morning? An uptick. So 19,500 here on the screen, with the Sensex inching up by about 360 points on the pre-open rates. So let's find out those mid-cap calls from our charters, Zen and Vaishali. To you first.
So I would look at IDFC Limited. IDFC Limited is showing signs of reversal. Long-term trend remains intact, and I think after a brief consolidation, the stock is ready to go towards 124. So I would say with a stop loss of 113, look for a trading target of 120 to 123.
Right. Kunal, what about your mid-cap ideas?
So I'll go with the Ban Poonawalla FinCorp. The stock yesterday showed signs of a bullish engulfing, also retracing back towards its 200-day moving average and bouncing off from those levels. Strong indication that a major bottom could be in place for the stock. 388 as an immediate target, stop us at 351.
Right, and let's tell you what else is happening outside the world of equity markets. The IMF, or the International Monetary Fund, has raised its China growth forecast to now 5.4% for 2023, while warning that real estate struggles persist. The IMF cited better than expected third quarter growth and Beijing's recent policy announcements, while still expecting growth to slow next year to 4.6%. Meantime, the Israeli forces have claimed to be in the heart of Gaza after they stormed the city with land, air as well as sea troops. The Israeli military said it was using explosive devices to disable the Hamas tunnel network under Gaza as a part of its next phase of offensive in the besieged enclave. In fact, this comes even as the UN highlighted that on an average 160 children are being killed in Gaza every single day in the war, which has seen over 10,000 casualties.
With just 4 days to go until Diwali, there is no respite for residents in the National Capital Region as the air quality in Delhi continued to remain in the severe category this morning. Meanwhile, the National Green Tribunal will hear a rising pollution case seeking action taken report from Centre, Delhi government as well as MCT. You also have India's maiden solar mission, which has achieved a significant milestone. Aditya L1 captured first glimpse of solar flares using the spectrometer on board It is to be noted that ISRO on September 2nd launched the Aditya L1 spacecraft, the country's first mission to study the sun from the spaceport in Sriharikota.
All right, those were some top headlines to track, but what are the index calls from our charters then? What are they advising this morning? Well, divergent views. Kunal believes that this is a good opportunity to buy the Nifty. Vaishali, though, says that it's a hold recommendation. Views on the Nifty Bank, which, by the way, has been scaling up day after day. Kunal says buy. Vaishali's got a hold call.
Well, getting set then for trade this morning, and let's see where the Nifty pre-open rates have settled in at. Seems like it's going to be yet another mildly start. But Kunal, suffice to say that, consolidation yesterday seems like it's going to be a quiet one today as well. The bias remains towards the upside or not quite?
Yeah, the bias remains significantly on the upside. So, I was talking of the point that there's been a global risk-on rally back again into various asset classes. Now, the only change which has happened for Dow Jones and the US markets this time around is that it's not the two prominent indices which have done pretty well, the Nasdaq, S&P, etc. But the broader markets over there have also, shaped up quite well. And that was a missing factor for the global markets in the last leg of rally in the month of May, June. But this time around, it seems to be a lot more vibrant. The indices have scaled past about their respective 200 moving averages. Then we look at the various asset classes. Crude falling, gold still stable at the 1900 odd mark on the dollar prices. The silver also looking quite charged up. Bitcoin moving up higher. So it's more of a risk on which has come back into the global asset classes. And I think in that context, we could probably be looking at our markets also scaling up higher. Again, the good part for our markets is that the broader end of the markets have done pretty well. The mid caps have completed a 10% correction. The small cap indices also, I think, completed an 8 to 10% correction in the last one and a half odd month from their August-September highs. So I think in that aspect, a major part of the retracement is also behind us. Looking at all of those prospects, I believe that there should be a significant upside for the index. Wouldn't be surprised we actually scale past about the 19,800 to 20,000 mark pretty soon on the indices.
Okay, just a few minutes to go, and I just wanted to understand as well from you then, Vaishali, given that we're talking about a pretty healthy trajectory on the Nifty Bank, a lot of those large cap banks have been participating. You have a hold rating. What's the rationale?
So I would say actually, individually, if you talk about stocks, Axis Bank, ICICI Bank, they all are in a very strong uptrend, even not to miss IndusInd Bank. So the heavyweight Axis and ICICI are doing very well, but it's time for HDFC Bank to buck up. So I would say that keeping in mind that all these banks should participate, I would say Bank Nifty is ready for a takeoff towards higher targets.
Okay, that's the take coming in. Let's take stock of some of the big buzzers in the pre-open. It's Prince Pipes, which is a result reaction showing traction of almost 10%. Prestige was a stellar set of numbers, and of course, the momentum in the real estate pack is something that we all have been talking about. A 5% move there in the pre-open. You also have Deepak Nitrite, GSFC from the entire fertilizer space, which are also showing traction. And then Lux Industries continues the up move as well, and ditto can be said for Cochin Shipyard. Apollo Tyres, strong expansion on the margin front, and that's getting a thumbs up from the street. On the losing side, Indigo down about 1%, Ratnamani Metals taking some profit booking, and then Amber Enterprises is the other one. But a lot of stocks will be at record high levels, case in point being Prestige as well as Trent, even Kalyan Jewellers for that matter. In fact, Vaishali, come in on the charts of Kalyan Jewellers as well as Senco and Titan. All of these stocks have been rallying quite hard. Is there any name that still looks like a good buy?
Well, I would definitely look at Titan because that's where we really focus on. And I would say that Titan is still a buy in decline because the stock has already shown a run up right from 2,800 levels. And now we are seeing it going towards 3,200 levels. So I would say buying at 3,100 if one gets a chance, look for a target of 3,400.
Okay, Vaishali, great to have you on the show. We'll let you go on that note, just getting set for the market open. And like we said, the global cues, of course, are looking positive. In fact, the S&P has posted its 7th day of consecutive gains coming in. All major averages are in a pacey mode, and the US 10-year yield pullback also continues. So that's really been aiding the mood across the world markets. More importantly, I think India specific, it's crude. The fact that we've retreated all the way to that $82 per barrel mark, that's definitely comforting the sentiment on the overall India market, along with, of course, the US yield cool off as well. That said, broader markets, they continue to be where all the gains are concentrated. I mean, not to say that the large caps haven't been participating, but irrespective of the FIIs self-figure for a 10th consecutive session, we've been actually holding above that 19,400 mark. That's where we shut shop yesterday. The broader markets continue their gains as well for a 4th consecutive session now. And we've been holding out quite decently well. Quite a bit of churn within the large caps. That continues to play out. That was the case yesterday too. Talking about crude, what you may want to look out for, of course, is what OMCs do, what the likes of Reliance, IOC, BP, HP, MRPL, or Chennai Petroleum may actually do, because remember, the marketing margins for these companies is set to get a fillip with the decline in crude prices. Also, on the flip side, for an ONGC, for an Oil India, for a Vedanta, for an HOAC, lower crude, however, would mean lower earnings. So the sentiment could be soured when it comes to some of these stocks. But that's pretty much it. A lot of buzzing stocks to track and trade. We've seen what Hindalco may actually do in trade post its wholly owned subsidiary, that's Novelis, actually coming out with a great set of numbers. So that's going to definitely be one stock to look out for. Good numbers coming in from Power Grid as well. The EBITDA has seen an uptick of 5%. Margins as well have expanded now to almost touching 88% on a year-on-year basis. For IRCTC, the catering business has seen a revenue uptick of about almost 29%, and EBITDA is higher over about almost 20-odd%. So these are a bunch of stocks to look out for. And of course, Apollo Tyres, there's been an earnings surprise there. The EBITDA has jumped up nearly about 63%, and the Q2 numbers are above estimates on all counts. So those are some of the specific names to look out for. Of course, Honasa, day 2 of its listed life. So we're going to be tracking that stock too, and how it actually pans out from, of course, its listing day yesterday. The first rates then on your screens right now, it's bound to be a tempered start, but with a positive bias. So we're slowly inching up higher. Made it to that 90,450 thereabouts mark. but cooled off ever since. I can see Hero MotoCorp, BPCL, Bajaj Finserv, Bajaj Finance, Adani Enterprises. They're all holding up in the green as we speak right now. Uptick coming in on Adani Ports and UPL as well. Tata Motors, Hero MotoCorp, they're all holding out very smartly. Let's check in on what Hindalco is up to. That stock will just come up for you on your screens. Let's see the rub-off from Novelis's numbers. Hindalco just about very mildly up actually. Hero MotoCorp too, after that agreement with partners in Europe to start EV operations by 2024 on the sidelines of the Milan Auto Show. Hero MotoCorp holding up 1% as we speak right now. Power Grid, IRCTC, Apollo Tyres, Deepak Nitrite, they're all earnings reactions. Flat for Power Grid as we speak right now. IRCTC mildly higher. Apollo Tyres, of course, is a big dhamaka one. So over a 3% move. Deepak Nitrite, 4.5% jump up coming in on that stock. The EBITDA, remember, has jumped up about 12%. Margins have come in at 17%, which is quite an expansion from the same quarter last year, wherein they stood sub the 14% mark. But Balrampur Chini, the gross margins are also up over 1,000 basis points. And we're going to be chatting as well with the management in the due course of the show. 1% higher for Balrampur Chini as we speak. Cummins, Voltas, these are all stocks which are in focus as well this morning. Anisha, what are you spotting?
Well, a lot of result reactions itself, as you pointed out. So, Prince Pipes, of course, is higher by 7%. Prestige, Apollo Tyres, Uno Minda, Cummins India. These are the names that we are watching out for. Our Policy Bazaar is actually a bit lower, so let's track that one. AIA Engineering and then Max Healthcare is the other one. Sectorally speaking, it's PSU banking names that continue to charge up. So, Bank of India, Bank of Baroda, Punjab Sind Bank, these are your top gainers. And Realty, after that, a bit of a profit booking yesterday, is bouncing back, led by that solid gain on Prestige. The only name on the back foot or only sector per se is the banking index. So, on account of the weakness in HDFC Bank and ICICI Bank, the banking index is a bit under the weather. So, we are tracking that one, though the advanced decline ratio for the broader market continues to be very, very impressive. Kunal, any first trades?
Yeah, I think ICICI Bank looks attractive from the pack. The stock is heading towards a breakout of the 50 DMA at 950, 952 mark. So I think above those levels,